It's a significant impact, and we have to consider that where the storm is coming ashore. So right now, we're looking at a tidal surge that pretty much encompasses the entire Texas Gulf Coast. So what this means now is that one third of U.S. refinery capacity, that is our ability to turn crude oil into gasoline and diesel fuel, is now under threat. Now, when we throw in the Louisiana coast also, because again, this is a hurricane, very unpredictable. We don't know exactly all of the ramifications. But when we throw in the assets along the Louisiana coast, then we're talking about 58%. Four out of every seven barrels of refining capacity, that is refining capacity east of the Rocky Mountains, is now under threat. Now, in this case, the storm was well documented. The industry had plenty of time to initiate their emergency protocol. They shut down their units in an orderly manner. So, if, in best case scenario, storm passes with a minimal amount of wind and flooding damage, then these refineries will ramp up operations within a week's time, and the impact on the consumer with regard to gasoline prices will be minimal. Now, of course, the fear here is if we do get significant flooding and we do see significant outages into these refineries, then these refineries could be shut down for weeks, even months, as in the case that we saw after Hurricane Katrina. That would certainly cause an impact both on the crude oil market, but especially on the product markets. All of the Gulf of Mexico shipping lanes are certainly have been disturbed, and that so it's going to have a tremendous impact, GDP impact with regard to events because a significant amount of goods that are either being imported to the United States or being exported from the United States are going to be disrupted for at least a week. And once again, depending if there's any sort of significant damage to the ports of Corpus Christi, the ports of Houston, Galveston, so forth, it could have an extreme lasting event. So it's going to create a lot of volatility. Now, for investors and for speculators looking into the market, some of the things you want to keep aware of that when we see next week and the gasoline demand figures, for instance, over the next 2 weeks, they're going to be extremely skewed. Because what happens in a place like this is the gasoline stations, there's a run on them. People have been going to the supermarkets, clearing the shelves off of potable water and essential food items, and doing the same in the gasoline market. So topping off their tanks and their generators and so forth. So you're going to see an outsized increase in the demand figures over the next 2 weeks. That will be corrected over the next course of the next 3, 4 weeks. And it's the same with the import, the export numbers, with these vessels being either held out of port or being held in port, not being able to take the petrochemicals or goods and so forth out of port and so forth. The trade numbers are going to be extremely volatile over the next several weeks. It's going to create a lot of confusion. And in any market, when you have a lot of confusion, you're going to have a lot of volatility.